James, thanks so much for coming on.
Hello, mate. Nice to see you.
I know, always a pleasure, never a chore. I'm really excited to get you on, as I know you've really taught me a lot about trading, and I know there's a lot of group chats I'm in with people. They frequently reference what you've said, as people will hear in my interview with Liquidity Goblin. We've talked about you a few times, so thanks so much. So maybe just to kick it off, so I think you've tried every way to make and lose money possible. So, so I guess
Yeah.
how did it start? Like, what's your career in trading? Like, where did you start? And just give us a bit of a breakdown of how you what brought us to here, I guess.
Okay. Well, I'm quite old. Well, I'm old by the standards of people who hang around on Twitter making crass jokes like I do. So I've tried a lot of things, and some of those things have been successful, and some of those things have been less successful. But I've been independent trader, gambler, in various guises for probably best part of 15 years. And I've had times when I'm like full on, right? I'm just trading full time, and I've had times where I've like now, right, where I've just taken a break and done some different things. But I've done a lot. I've done a lot of things, right? And nearly everything that I've done has been oriented about some kind of observable, quantifiable idea. Right? I'm not sort of generally sat there trying to sort of think about the European economy or analyzing the fundamentals of a stock or you know whatever, reading through the unlock schedule of a shitcoin or whatever it is that I'm usually sort of orienting around just a few key ideas of what tends to make things mispriced or not. And my execution of trades might be automated, might be discretionary, might be manual. Generally what I've been pretty scrappy, and I just like to move fast and go after easy money where possible. um, so yeah, I've done lots of things. I had a finance career, then I set up a consultancy doing big data analytics type stuff. This was when Hadoop was just kicking off, and that was really what kind of kicked me into this stuff, where I realized it was feasible to just do massive scale data analysis on loads and loads of data, and it was feasible on sort of commodity hardware, computers that you and I could have. And I kind of had this insight, which I've had. If I look at my trading career, I've had a few insights. I'm not very smart, but I've had a few insights that were useful. And one of those was that it was probably maybe we could get a trading edge by doing real simple things with massive amounts of data, rather than trying to be really sophisticated with small data. Um, and that led me down to doing future spreading and stuff, which I can talk about later. Did that for like 4 or 5 years, I think. Then my mate went off to join an ashram. Then I had another realization, which was that stupid new stuff is probably a good place to look for edge, right? If something's new and it's stupid and no one quite knows how to price it, it's flying around all over the place and there's tons of it, and all of that stuff that can lead to the conditions that can be good for trading, things being mispriced and stuff like that. So I looked at leveraged ETFs, and I had a whole bunch of, I guess, what if we were a grown up, we would call statistical arbitrage strategies, trading leveraged ETFs. Then I had a sort of few disastrous goes at long short equity option stuff. I just made an almighty freaking mess doing that stuff. Had a treasury future strategy that worked well. Then ended up trading crypto, and trading crypto was a lot of fun and sort of nearly made me go crazy. But crypto was a good example of sort of me, where I started this spiel, right? I was talking about getting an edge by analyzing massive amounts of data. Um, Crypto was really me working with zero data, right? Crypto is really going me, hey, look, there's this freaking mad market that's spread really wide, dislocated all over the place. You've got way too much leverage. You've got all these weird structural effects. I can just make sense of this market without really doing much data analysis at all, and I can do sensible things and I can make money. So crypto was a good thing where I go, hey, look, I've accumulated all of this knowledge around how stuff works. I don't I don't need to run a whole load of simulations of back tests and stuff. I probably just know what's going to work here and then just apply that there. So that's the kind of whistle stop tour of all of the well, most of the things that I've traded.
I feel like when you mentioned that with crypto, I definitely think, well, definitely is a strong word, but I can totally understand how, you know, as the longer you trade, the more you learn. And when you come into a market fresh, you're pretty, you had already seen things and experienced things that, crypto traders,
Hmm.
they might not have even understood. So I get what you, so I think you definitely would have had an advantage coming in from, futures trading where it's relatively efficient. There's only one venue, volumes
Yeah,
are, there's only so many instruments. Whereas then you've come into crypto and you're like a kid in a candy shop, like, oh my God, all this stuff that's kind of dead in TradFi will
yeah,
just,
yeah. Yeah, well, I didn't believe it at first, right? I'd look at this stuff, and you just you just look at the state of the book, and you go, well, why is that still sat there? I don't believe why this is sat there. I'd be scared to take that price in TradFi because I knew someone would be about to screw me, right? And then you just go and lift it, and nothing would happen. You'd be like, oh, there's just money sat there. So yeah, it took me a while to actually believe that some of the edges and the sort of inefficiencies and mispricings and things that were in crypto actually were there. It took me even longer to get confident enough to do it big. So, and look, mate, this is like a constant regret that I have, where I've sort of, I've gone around trying to sort of jam my what is my kind of funnel, my money funnel into whatever looks like the easiest piece of edge, right? And then when it gets hard, I've moved on and tried to do it somewhere else. But I always regret the amount of money that I managed to pick to sort of pull out of it a little bit. Where the going's good, I always wish I just went a bit harder at it. And
uh,
certainly with crypto, that's true. I did not take as much money out of that godforsaken market as I'd have liked to.
there's a bit of survivorship bias. How how you hear all the old traders talk and they're like in their 60s and they're always bearish, and you're like, man, these old guys, they're always so grumpy. And it's like, no, they've survived because
Because
they're
they have
grumpy.
to be.
Yeah,
Yeah,
exactly. Because
yeah,
it's like, oh, I could have bet more, and it's like,
well, you've always got to survive as number one objective, right? Like number one objective, you need money to make money. So losing money, and especially losing a large amount of money, is really really bad, right? You got to fundamentally avoid that.
that's why I used to hear all these, because I read trading books for ages before I actually properly traded. Like, I always wanted to be a trader, and I'd always read all these quotes about like, oh, it's about surviving, it's about this, and I was always like, that's so like lame. And now I'm doing it. It's like, yeah, I just have to hold on. I just have to make it through this
Yes.
drawdown or
Well,
like this month or whatever.
well, that's because you've got past the point where you understand how to find edge, right? If for most people they don't fundamentally know how to do things that are expected to make money. So for most people, I think your initial reaction is kind of right in the sense that actually these guys are lecturing me about risk control and things, but I don't even really know what to buy and what to sell. I don't know how to recognize when something's mispriced. I don't know how to, and your fundamental number one goal as a trader is first you need to figure that out, right? First you need to figure out, given you're trading with a bunch of other people, when are they wrong, right? When are they prepared to sell you something too cheap? When are they prepared to buy something from you that's too expensive? And that's the fundamental thing, right? And then you've got this. Then you've got the stay alive thing.
It's true, and yeah, I get what you mean before. How you were saying, there's something I'm missing, and that's why I think some of these young guys come in and just blow it out of the water. Because, and I'm one of them. Well, not that I blew it out of the water, but I did
No,
okay.
you are. You are.
But it's like they're just like, oh yeah, fuck, why not? Why wouldn't this work? Like, yeah, of course I can do this spread, and it's gonna make, yeah. It's like, why wouldn't it close back in, or why wouldn't this happen? And then you do
Yeah.
it for a little bit longer, and it's like, oh, there's something I'm missing. I'm being adversely selected. Why hasn't someone seen this? But if you don't have any experience, you don't know. You don't know. So it's like, yeah, why not? I'm just gonna, yeah, why wouldn't I close this or whatever?
Yeah, like, the problems that you think you'll have are very rarely the problems you actually have, right? We can all sit there fantasizing about what it would be like to be a trader and all the cool stuff we do and the scientific analysis we do and the chicks on the yachts or whatever it is, but the reality of it is fucking mundane. Right? The reality of the actual sort of trading process is very, very operational. It's very different.
And when you talked about like as you know, I'm a big fan of collecting risk premium, and it's like that is so boring, and it's like it's not boring. Sorry, it's like it's just mundane, and
Yeah.
it's kind of interesting with trading how it's kind of the only job, well, one of the few jobs where you're actually rewarded for doing nothing most of the time. And
Yeah,
like
kind
if
of.
you're
Yeah.
someone who's hyper aggressive, you're self-motivated, you're always trying to make money, you're always trying to do stuff, it can be really hard just to sit there for a week or two and just be like,
Yeah.
well, my risk premium is ticking over, my active strategies or alpha isn't happening because they're waiting for flow or whatever. So I'm literally just like, so you got to make use of that time, but it's hard because like you want to punch around some coins, you want to bang some
Yeah.
spreads or whatever. So
Yeah, and like the sort of what the deeper point there is, it's never really about us, right? I think if you take the very smart person, the nerd that's trying to solve it like they're in science lab and try and sort of solve a problem, figure out the market, and they think that somehow by force of will and smarts they can engineer the opportunities. But fundamentally, if someone isn't wrong, if someone else isn't prepared to offer you a price that's good for you, bad for them, no amount of smarts on your part can engineer that. Like, you can only eat what you're fed. And, absolutely, to go back to your point, doing things is not necessarily valuable, right? Like, doing things at the right time is being responsive to the right circumstances is valuable. So, like, absolutely, what we sort of want to do is to tinker about, but sometimes we just got to sit on our hands, right?
yeah, absolutely, and like not turning over the portfolio because it's like it just costs money to like rip money out of an on-chain protocol that's paying really well and then deploy it somewhere else, and it's like to hedge
Yeah.
the delta, it all costs money. So
Well,
um
there's a thing that Ewan says quite a bit, which is like trading costs at infinite negative Sharpe ratio, right? Trading, the act of trading, is a guaranteed loss. So you want to do the bare minimum of it, given whatever the thing that you're trying to harness is. And that's where there's a trade-off, right? Where there's a trade-off between maybe slightly higher expected returns or just crushing and minimizing costs, you're nearly always better at crushing and you're nearly better off focusing on crushing or minimizing costs. And that's often the case, right? The thing that you want to be true is often not the thing that is true, right?
yeah, I think uh your mate, or like our mate, the guy who wrote Laws of Trading, Augustine,
Augustine, yeah.
excuse, sorry.
Fantastic, amazing book. Like, it's basically an entire book about adverse selection, but it's an incredible. I've been shilling that thing for years.
He said in a tweet something like the easiest way to increase your alpha is to lower transaction costs.
Yeah,
And the thing is, it's not sexy. It's not sexy to sit there and
yeah.
go through like, okay, am I getting the best fills? Am I da da da? Who doesn't want to be banging around perps in a dom? You know what I mean? In
Mm.
a depth of market doing this. But at the end of the day, yeah. And just for everyone else, just if you're listening and you don't know who James referenced a second ago, Ewan Sinclair, he wrote a book called Options Trading Strategy, the most famous one. It is such a great book. Like, go listen to every interview he ever did. The way he talks about risk premium and alpha, when I heard that, a lot of things clicked
Mm.
to me because it's like the analogy of the highway. So I'm like subtweeting him on our podcast, but yeah,
Yeah, there's a bit. I forget which one it is. I think it's either volatility trading or option trading. But the preface of that book um, basically taught me how to trade. Right there's you know, trading books are terrible, right? Trading books are absolutely terrible. And there's a few serious ones, but the serious ones are nearly always just real technical stuff. right? Not about sort of instruments and things, not about the discipline of actually trading. Ewan's books are great because they teach you about the discipline of trading, the process, the importance of the things that we actually do rather than just the kind of technicalities of the instrument and stuff.
And just yeah, I agree. It was like when I read that, it was like having a trading mentor. And then I went through
Yes.
and listened to
Yeah.
every podcast you ever did. So yeah, great stuff. Just to tie it back, you mentioned at the start you were doing. Oh well, just maybe just before that, what made you want to get into trading? Like, had you like because you were doing you?
Oh,
Yeah, it's like
yeah.
what? Why were you like? Oh yeah, this what's this? I
Well,
want to go
the
and do
main
this.
reason is that I think I'm too smart for my own good, right? So I had a finance career, and I'd flown around, and I had this sort of I would hesitate to call it a grift, but I had this setup where I was I was living in London, but I wasn't, right? I was nearly always abroad with my accommodation being paid for by my employer. I had all of my expenses paid for, and I just sort of saved up quite a lot of money through doing this. So I took sort of time out. I got into, I sort of started a data analysis consultancy. And then I met people, right? I met people who were, so I was on the sales side finance, but I met people through consulting and had a trader that I met who sort of took me under his wing, and it was a big fat English guy. This was out in the US actually, and he taught me most of the things that you hear me say every single day, are stuff that he kind of jammed into me. And what I did was I set up with a mate, and we started spreading futures. So I wasn't really trading then. So this would have been 2000. I don't know. It would have been about 15 years ago, I guess. I wasn't really trading, but I'd been dabbling, doing sort of toy kind of quant stuff and things. He was trading, so he was set up with TT, just randomly eyeballing the DOM, slinging futures and stuff. And what we decided to do was we'd go, hey, look, I have this new ability to crunch massive amounts of data. Let's effectively sort of set up a pretty kind of tight data mining setup where we go, hey, look, let's just look for stuff that's basically the same, that kind of diverges and converges in a way that we think we can spread it together. And I've totally forgotten what question you originally asked me. You asked me why I started trading. I just thought it would be cool. Right? I just thought it was fun. I wanted to do it. I was gambling. I was trading a little bit on the side. I was betting sports and doing a bit of poker and stuff. And I just have that kind of mental illness where I find these things interesting and challenging.
It's a bloody curse. So I know exactly.
Yeah, I know.
It's all...
and it's really, like, people say it's not about the money, but for me, it really is not about the money. Like, I don't actually, I like making money. I like the ability the fact that I'm a good trader and I can turn money into more money. But the actual dollar figure doesn't really interest me. I live in New Zealand. We go out in the camper van every weekend and stuff. I don't have expensive tastes or anything like that.
I totally agree, and it's like it's almost like to make it, yeah, it has to be more than the money. Because if it's like you just quit, because you could just go and become like
at times it's bleeding awful, right?
yeah. So it's like
Times
you
it's
could go and like get. It's like I think yeah, the guy from Laws of Trading said if you're successful as a retail trader, it's probably negative EV because you could just go and get a job because if you're I'm paraphrasing, but it's like if you're smart enough to make that work, odds are you're kind of wasted in doing it, sort of thing.
Oh, absolutely. Look, I mean,
Yeah, I was said you were doing convergence trades when you started. Was
yeah.
that like, was that more? We so were you looking at just eyeballing levels, or were you trying to do like real analytical stuff? And the trader you were with sort of kept you away
Okay.
from it, and he's like, "Hey man, you don't need to worry too much about that. Like, let's just buy low, sell high, sort of thing. Double down."
Yeah. Well, so I sort of certainly went into that thinking I was some kind of sort of genius, mad scientist, and I can apply this toolbox of econometric tools, and we can be very precise about what we're doing and sort of things. I soon realized that, I think I said before, the problems that you have are not the problems that you think you're going to have. And nearly all of our problems there were operational. It's like, well, how, what we were. So what we'd basically do is we'd screen for stuff overnight. We'd pull it up. We'd get some charts up. We'd eyeball some levels. We'd type them into Excel. That would feed this thing called Autospreader that did the trades, and it was this kind of semi-automated kind of setup, but everything involves a lot of work. Before that, like, our biggest challenge was just getting people to care, right? Like my mate's he fantastic dude. So he was actually born in Thailand, ended up over in the US. I met him over there, but he was the kind of guy that had a guy for everything, right? You tell him that you just bought a tire for your car and he'd be mad. He'd go like, hey, look, you should have told me, and I'd have called my guy, right? Like, if you bought a suit, he's got a guy for that. He was just one of these sort of fixer guys that just knew everything. And his job basically was just getting us access to markets when no one else would care about us, right? We were just these scrappy bunch of dudes with not that much money trying to sort of scrape our way into these markets. But yeah, sorry. Point I was making is I went into this thinking that I was just sort of science guy, right? I was going to do maths, I was going to do quant, I was going to do. Actually, what we're doing is just keeping things hanging together, and my mate is almost 100% on just commercials, getting us access to things, making sure that we've got the right set. And what we've realized quickly, or no, I always sort of rewrite history, mate. Like I'm telling this story like I'm some kind of genius that foresaw the future. But what we realize eventually is that the trades that were hardest to do were the ones that paid the most. So at that point, we're like, click. Okay, I understand this. So what are we doing trading? I don't know, the E-mini against the Nasdaq and the E-mini against SPY and things on CME, when my mate over here can get us access to 2 different Thai futures markets, and we can start spreading that there. So at that point, we just exploded into freaking Heath Robinson mode, and we were, we had this sort of, I don't know, reasonable automation setup. 2 months later, he's sat in front of some janky bit of software trading one leg of this spread. I'm sat in front of this other crappy bit of software trading the other leg of the spread, and we're making way more money. So we learned there that, it's not your smarts that really make money. It's just having the sort of wherewithal to play in the right place or play where it's really uncompetitive.
Yeah, it's so true. And it's like picking your counterparty. And I think about that all the time because I always assume, I was out with dinner with my missus the other day, and I'm like, how many times a day or how many hours a day do you spend thinking about adverse selection? She's like, I don't. And I'm like,
I don't even
really?
know what it is. Right?
She's like, I'm like, so you just go through your life not thinking about it? She's like, no, I never think about it. And I just, like, all day, I'm like, why would X happen? You know what I mean? Like, why is this happening? Why is this happening to me? Like, what am I being, not like, why is this happening to me? But you know what I mean? Like, as I'm taking trades, as I'm doing things, like, is there something I'm missing? And, yeah, it's so true. So, like, trying to do things that have already been proven in uncompetitive places, like, yeah, it works for a reason.
It's funny you say that about your missus, because my missus is amazing in a haggling situation. Like, if we need a sofa, she will sit in that shop for 6 hours to get a few $100 off. If I'm buying a sofa, I'm just lifting the offer, man. Moving on.
I am like the most embarrassing person in the world to go out and haggle with, because like I've reached, like, I am the worst. Like my
Are you really committed to it?
You got no idea. I love it. I love it.
Oh, do you?
I love it so much.
Man,
It's
I
like,
can't do it.
so it's like, so for example, I'm the nightmare counterparty from hell. Like, I
Yeah.
would never deal with me because I'd be like, dude.
Oh, I remember your story about the FX trade. No, sorry, the retail FX bucket shop, right?
Yeah.
You picked them off, didn't you? And then just argued for
dude,
days.
without doxing myself, that was like, that went on for days, and I was like, and I you gotta understand, like, I know you might see me on Twitter or whatever, like, I'm just some dude at home punting around, like, I am not running a big operation, so it's like I'm like, I'm gonna get my lawyer involved. Like, you have no idea what you've done. Like, and like you got to keep in mind, I deposited like a little bit of money, so they would be thinking like, this guy's the real deal. Like, he's got, he opened an account
Yeah.
on Monday and Tuesday he had a bit of cash. So I'm like, I was really playing that and stuff.
Yeah.
So, but we went to pick out this engagement ring recently. And we went in there, and the saleswoman was really smart how she tried to play us against each other. But I always say to my girlfriend when we go into these places, like, don't say anything because they do the divide and conquer. So
Yeah. Yeah.
you gotta work with me here. So we're we're picking up this, we're choosing an engagement ring, and it gets to price, and I start haggling, and I'm doing my bit, and the woman goes like, it's not just about the price. It's about, it's not just about that. It's about the journey for your missus, and don't forget about her illness. And I said, on God, like I swear on my life, I said, fuck her. Don't worry about her. This is about me. We don't have to get married. I'm deciding to do this. And my girlfriend just laughed. And this woman, like, I could see she was like, oh my God,
So
I am
what's
dealing.
happened?
Yeah, she's like, I am dealing with the most unhinged man. And we got
Yeah.
out, and then my girlfriend just laughed, and she's like, yeah, I bet we'll get a good deal there. And I'm like, yeah. So absolutely.
Yeah,
But
you're a trader through and through, right? I turn off that part of my brain in my kind of personal life. I think generally, I mean, if I'm trading a lot, it's hard, right? And trading it a lot is hard, and it's hard to context switch, and you find yourself doing annoying things like talking over people, and like because that's just the nature of the thing. But generally it's best to try and avoid taking that kind of type A assholeness into your personal life where possible.
yeah, I'm working on it. Every day's a struggle. You mentioned you went from, so you're doing the future spread strategy, which was ticking along. You end up doing like Thai baht over like barley wheat spreads or
Oh,
what.
yeah, yeah,
So
yeah,
what? But then you went on to
something.
leveraged arbitrage and ETFs. What was like? So were you just like, hey,
Yeah.
this is like, what was the progression? I guess is like, how did
Well,
that? How did,
I'd lost my mate, and I just didn't want to do so he'd gone off to India to go in an ashram and find God or whatever he was doing, and I didn't like. It was a very operationally intensive strategy. Um, if I'm honest, he was by far the most important person in the partnership, right? Like he was the guy that made all of the important things happen. I was I was running the models and the sort of trading rules and things like that, which turns out was sort of the less important part. If you've clued into some inefficient market where things diverge and converge, you can trade that with a potato and you can still make money. That, like, you sort of get clear about what's the hard bit and what's not the hard bit. Kind of had to get over myself a bit there, but I just didn't really want to do it anymore. So then I started looking at stupid stuff, and I'm probably lying a bit here to sort of give some structure, but one of the things that I would say that I learned about leveraged ETFs is, hey, look, if you've got a market that's new and is very broadly spread, there's lots of these things. It's very highly leveraged, so people are kind of getting wrecked out of it or constrained or trading forced and things like that. You basically got all of the conditions in place to find things that are getting temporarily mispriced. And exactly the same thing with crypto. So I think my trading of leveraged ETFs, investing in ETFs, was really important when I later went on and traded crypto. But I was doing very simple things, right? Like, there were some structural trades, right? And these are the things that are most well known about that complex, which is that the things, well, often, especially back in the day, right, these things were far too leveraged, right? Which meant they had sort of structural reasons why they over the long run they would massively underperform 3 times their target or whatever they were trying to do. They also routinely missed their targets for various reasons, because imagine it's a fund that has to trade, and it has to, usually if the market's gone up, it's buying, right? It's going to need to buy more to maintain its leverage. Market knows that it's doing that, Some of them were ETFs that actually had to trade. Some of them were exchange traded notes that didn't have to trade. But long story short, a whole bunch of structural reasons why they often missed their daily targets, which meant that you could kind of get long that tracking error, right? By shorting lots of them. If you shorted lots of them, you're basically making money when they fail to meet their target. You're also taking advantage of some sort of structural decay stuff, mostly based on them being over leveraged. So the structural thing is I basically ran this portfolio where I just short shitload of these inverse and leveraged ETFs, and that was sort of, operationally a bit annoying, right? Because you got to think about borrow and hard to borrow, and when you get chucked out of positions, you need to manage your risk and things like that. But it was a trade I could manage, and I was doing that. I was also doing trades that were very similar to the futures trade, where I basically go, hey, look, I've got this leveraged ETF that's supposed to run at 3 times. It was supposed to meet by the end of the day 3 times the return of its index. If I track that thing intraday and I've got some basic model of where it should be trading based on the moves in the index, and it happens for whatever reason to be trading above that or below that, I can get my hammer out and I can kind of get paid to donk it back into line. Right? And this was, insanely simple models, right? It's obvious what the thing should be trading at, but it's highly leveraged. There's tons of them. There's not much liquidity. It's all a bit of a mess, and you could just get paid for doing that. And I was doing that in the ETF itself, and the best trades are actually in the options there, where there's options on these mad leveraged ETFs, and you can put some small relative value trades on based on which ones look expensive, which ones look cheap. There were also in those leveraged ETFs a bunch of momentum effects that happened at the end of the day. But I think those people that's pretty well known. I didn't trade that stuff there.
Yeah, it's funny because in crypto they have those ETFs, and I think you were pretty prolific in the and the FTX one. Well, that was around,
Oh, it's
and
all over that shit. Yeah.
yeah, there was like the menace of FTX, and
Yeah.
then I think MEXC has one at the moment where you can where they go out so far or something. So someone was telling me about that. So there's a little alpha
Yeah.
drop if you're listening.
Yeah. So those, I mean, the lesson I guess here is you've got to think, you've got to be realistic around where you might find a mispricing or a price disconnect. If you're looking at SPY or ES trying to consume macroeconomic information or geopolitical information and make a value judgment about that kind of stuff, it's you got to be really good to make that kind of stuff work. If, on the other hand, you can just identify a place where price dislocations are likely and build a dumb model to look like that and just to look for that and just boff them back, that doesn't involve much obvious cerebral skill on your part. Right? It involves work, it involves process, it involves some technology skill, it involves some market smarts, but that's all achievable. Like, I can learn that. You've learned that. We're not this. We're incredibly charismatic and good looking, but we're probably not the smartest in the world, right? We can do it.
It's funny because I always think about and when I used to run my businesses, I'd always think about like who am I like sort of playing against, and I think people are attracted to macro because it's sexy. They get all the headline. Yeah, it's so cool. Paul Tudor Jones, Druckenmiller. Who doesn't want to bang around some gold at 3 a.m. New Zealand time?
Yeah,
But
exactly.
make like 100 grand or whatever. But like, it, and I think people are also really attracted to like directional trading strategies because they don't have to be honest. It's like, oh no, I just know when it's going up, and I just sort of and,
Yeah, it's
like,
easy to bullshit yourself, right?
yeah,
It's easy to
exactly.
let
It's
yourself
so
off the
easy.
hook. Yeah.
Yeah, so it's like when you talk about and when I used to hear people say, oh, I want trading strategies that I can build a business around, I would literally be like, what are they talking about? Like, what do they mean
Yeah.
building a business around a trading strategy? And now I'm not saying I'm running a business around a trading strategy, but I think like it makes sense because you want something that has cash flows, has expenses. You know, you can explain it to people. It's not like, opposed to being like, oh yeah, I just look at the Bitcoin da da da, and like I just bang around some. It's not. I mean,
Yeah.
people are successful in doing that. Don't get me wrong, but I won't be one of those people. If I could have
But
been, I would have been. Sorry.
I sometimes kind of, sort of, you think, hey, look, if someone came to me wanting me to fund their business, right? And they told me that the reason they make money is they're smart and they have the best levels on Bitcoin or something. You go, well, no way is that a thing that you would expect to make money. If you're doing something that involves taking on risk other people don't want, providing liquidity to the market, flat, I don't know, aiding price discovery, whatever we're talking about. If you can sort of actually tell me that you're doing something useful that's of service to someone, or is useful for someone, or is of service to the market, then you can start to believe why that thing would make money. But I'm smart and I can just hoover up information and make smart value judgments. No one's going to fund that business. That business is bollocks.
I mean, just the fact they're asking, you're probably being adversely selected, right?
Yeah.
So yeah, it's like, yeah, 100%. No, I agree. And then so you're doing the structural stuff with the ETFs, and then you moved into Treasury future strategies. What
Yeah.
I remember you mentioned this to me once, and I was just like, that's so you. So if you could explain what you were doing, and I know you've tweeted
Yeah, I
about it
can.
and
So
stuff.
I can go.
Yeah.
I can go into less detail about this because I nicked it off someone.
Okay.
Right. So basically, the thing that made this strategy work was something that some drunk guy at lunch told us, who worked for one of the other trading firms, and that, I think, that's a good lesson in itself. Right. You don't have to come up with your own ideas. Right. The market doesn't give you any prizes for originality or showing you're working or any of the things that you were rewarded for at school, right? Like, you can find out what someone else is doing and then you can just do it and make money. But that was, there was the sort of closest thing that I did, which sort of looks like a grown-up quant strategy. Right, so this was an intraday treasury future strategy that looked like whereas it was government bonds generally. Looked at a basket of government bonds and traded mostly based on relative value signals between them, and some things I can't share.
Just to sort of tie it back with so when you were doing the leveraged ETFs, you were doing that on
Mm.
your own, I assume, right? So you were doing that as an independent trader.
I did mostly the leverage ETF stuff on my own. When I was doing treasury bonds, that was with a group of three of us, so me and two others.
So when you were doing the leveraged ETF stuff, this is something I struggle with, and I'd actually if you don't want to share 100%, that's fine. But how would you determine sizing? Because so I
Mm.
suppose you'd see this discrepancy, and you'd have up your Excel spreadsheets, and you'd be like, or whatever, your
Yeah,
trading journal, and you'd be like, your records, and be like, 9 out of 10 times this thing pays X.
yeah,
If I bet
yeah.
whatever, I'm going to make X. You're going to make Y. So how did you go about choosing? Was it just
Okay.
liquidity constrained? So
Yeah, so that was heavily and unusually, to be honest, when we're talking about sizing, usually we're massively constrained, especially in good stuff, right? Usually we're massively constrained, and this from crypto, right? Where you've got some opportunity that you'd love to get a whole bunch of money into, but you very quickly become the market. Like, you're say, if you've got something you think is dislocated, a sort of obvious dislocation, right? Something like the perp trading at a massive basis over the spot or something like that, in an illiquid thing, and you sort of want to push it back, but you find that that's self-defeating, right? Because whenever you trade, you're closing your own trade. Basically, you're pushing it in the direction that you want to go to close that trade, and you don't want to do that. You want someone else to do that, right? You want to load up and then allow someone else to come in and be useful and close close that opportunity, but you can't, right? Because you can't have everything that you want. So you end up just having to. There's only a certain amount of money you can get in those good trades, and have them still be good trades. The leverage ETF thing was like that, but different. Right? Generally that stuff was liquid enough for me. My problem was that there was only a certain amount I could gear it up. I remember these things trade as stocks. I was on portfolio margin with IBKR. There's a limit to how much in a long short strategy you can gear this stuff up. So I started off being, like a good choir boy. I was pretty much delta neutral in those trades. I was pretty much long short in those structural trades. Gradually, though, I began to incorporate more things, take more directional risk. That was probably a good move. I probably got rewarded for that, at least in expected return space. I did get absolutely hammered in August 2015, though. So if you look at August 2015, look at the VIX chart. I was net short quite a lot of VIX ETFs over that point. And although that looks benign, I was too bloody big, and I got hammered there. And that little bump on the VIX chart still kind of sort of makes me shivery. Still gives me a little bit of shame.
There's yeah, absolutely. Yeah, there's a story we'll tell later on how I was in that exact situation and cried uncle to you. So you're doing that, and then you got involved in crypto. What so this is sort of like, your whole life has been leading up to this point, because it's like, everything one could want in a, it just has all the
Yes,
inefficiencies. So what how did you get into it? What strategies? What were
I
you
was
surprised about?
I was really slow to it. I don't know, because I sort of flirted with the idea of trading it and trading it being a good idea, but for whatever reason, I'd never really done it. I was kind of dicking around trying to make this relative value option thing work, and just creating an enormous mess all over the place. Yeah, and and then at some point, I started slinging. I think I had a I forget what kind of account it was. Like all the exchanges are dead now, right? Like all of the original exchanges, probably except for BitMEX, that I traded on, are now defunct. But I was playing around, and I was just scalping about. I'm a systematic trader. Right? Like nearly everything is sort of around a systematic idea, but I also spend a lot of time in front of screens looking at things, trying to get ideas. And I found it quite easy to just scalp crypto. And part of it is because it's just a very, very young market, right? So very, very, very simple things would make money. Like I'd have you stick liquid exchange on the left hand side of your screen, stick less liquid exchange on the right hand side of your screen. The price on the left is your fair value, the price on your right you're just scalping around. And those kind of real dumb trades were really, really easy, right? I didn't make much money because I was only just sort of doing it on my PA, but they were sort of easy. It was also easy to bully liquidity providers around, right? Like, the people that were providing liquidity, market makers on those crypto exchanges were really, really dumb, right? They were really dumb. They tended to overreact to whatever had just happened. So, if you lifted 5 levels in that order book, they'd all freak out. And then the price would just absolutely plow through what you just done, and you could offload it. So I was just playing around, doing all these experiments, sort of trying to work it all out. And at some point, I decided, okay, well, let's start trading crypto. Right? There were three of us at this point that were trading together, and we started doing the real simple kind of basic bitch stuff. Right? We were. It was at the point where nearly every single perp was trading at a massive premium to spot, so that nearly everything carried short. So we were short the perps, long the stocks, and just kind of rolling that stuff. Then what did we do? Well, then we started getting getting involved on-chain stuff, right? So this was the sort of middle of DeFi summer, I think. We've been doing some yield farming, and if you remember back in time, that stuff was ridiculous, right? You could farm stupid stupid stuff. You could roughly keep it delta neutral by trading in the perps, and there was enough juice in that stuff to make it work massively, just because you had so many people coming in. But that sort of we were doing those dumb trades. So we were just doing real basic carry trades at this point. Yield farming, doing some short basis trades. Then I sort of knocked up this quick trend following and momentum strategy that we were doing. We were doing some dumb seasonality that bought Bitcoin every Monday, Wednesday, and Friday, and things like that. But then we started getting into on-chain stuff. Through the yield fund. And the thing that you realize there is, well, cool, I've got this new source of prices which can differ from their price everywhere else. They have their own supply demand dynamics, they have their own mechanisms, they have usually massive latency and illiquidity surrounding the price discovery on that. So there were a whole bunch of sort of, out of respect for people who are still doing these kind of trades, I won't go into it in huge detail, but we were doing these trades which effectively just look like this, right? They look like tracking the price of shit on Binance. And if it jumped a lot, just fucking spamming buy orders out there, right? When the price on Binance went down a lot, just spam sell orders down there. And we're doing these sort of one-sided kind of, I guess, latency arbs, you'd call them. And, you're just sort of spamming stuff, and you're hitting sometimes and you're not hitting sometimes, but you're trying to turn over your inventory okay. And these were sort of a bit technically difficult to get up and running, but very, very, very profitable. Now, the problem with this stuff is if you do that, you attract other people that are doing that kind of stuff. So we talked earlier about how, my biggest regret in trading is not pulling enough money out of things. This is definitely the case, right? You get down to work, you build out these sort of integrations, you build out these automated bots effectively, then you get 2 months of fucking making money every day. Then one day you come in and you're done for, right? One day you come in, someone else is better and faster, and and I can't compete in technical land, right? So these trades where you just sort of get into them, try and pull as much money out of them as you can, and then come out.
Yeah, it's really hard though. Because it's like this made so much money. Like I can't just flip the switch, and it's like it's like that hopium. You're sort of like, oh, maybe it'll come back. And just as a viewer's note or listener's note, I remember RJ and we were sort of mates. Like I'd say we're like best friends in the world now, but at the time we were sort of talking, and there was an exchange or a venue, and I was doing an on-chain arbitrage, but I saw this one way out of line, and I was like, this is insane. And I took a screenshot of it and I sent it to James, and I said, hey man, I saw this. Don't know if it's something you're interested in, but just it's interesting. And then a year later, I would find out that he was like the grim reaper of this exchange. And I think you said like, oh, that's so cool, man, thanks for sharing that. And you were just like the absolute terrorizer of that venue. So it was like you were probably just like, oh my god, like this is gonna get armed up in no time.
Yeah, and those trades, the thing is that you can't, when we talked about building a business, right, if you're you and I, right, we can't really build a business around that kind of stuff, I don't think. Like it's soon a proper business with a technology department and all of that kind of stuff. But what we can do, I think, and what I've managed to, I'm bad at lots of stuff, but what I've managed to be quite good at is identifying the early phases of things like that, getting trading on effectively the worst possible proof of concept trading bot you could possibly imagine, and just grinding it out for a bit of time turning it off when it's no longer feasible and moving on and doing something else. And I think, as you sort of suggested, I think what people find the hardest bit of that process is probably the last bit, right? Going, hey, look, we've had a good run, but there's just zero chance we can compete with these guys. Let's just pack it off and go somewhere else. And by the way, when you're talking about these sort of opportunities, these are opportunities where you're making money every day, right? You know when there's a new player in these markets because you literally see their trades, right?
Yeah.
You can literally see what's happening. It's not a case of people talk about alpha decay and they're not sure. Like that you're done for in these trades, and you just got to go and see if you can find somewhere else to play that looks similar.
It's funny to go back to what we were saying about Sinclair before, how you have your risk premium, and that to me, I mean, this is from my understanding, which could be incorrect. Like, this is just speaking from my experiences, but your risk premium is your business. And that's the ticking over, that's the making the money, that's the day-to-day stuff that's boring, it pays the bills, but it works. And that's where a lot of your capital will be deployed usually. And then your alpha strategies, I would define what you just said as an alpha strategy. Like, that is,
Yes.
you are doing something that other people haven't realized yet, or, because if they realize,
you're a fucking menace as well. You're
terrorizing the order book, right? So it's
you're just a menace. Yeah, so you can't expect it to last forever, that kind of stuff. And I used to laugh on Twitter about the fact that I was a liquidity provider during that time, right? Because no one, I don't want to tell people I'm just there spamming out freaking IOC orders all over Solana or whatever,
or wherever it was, not that we can remember.
Or whatever place it was.
No, yeah, exactly. And it's funny. Now I'll tell a funny story, and or maybe you could. Why don't you tell us about the sell trade on FTX that was pretty. That was a strategy.
Celsius.
Yeah.
Oh, Celsius was wonderful. So should we do the long version of this story? Have we got time? Yeah, Celsius. So I first found it, or first sort of paid attention to Celsius because I was losing a lot of money. So I was sort of messing around, trying things. So this was after I'd stopped doing on-chain arbs because it all got too hard. The short basis trades that I was doing weren't paying. The trend following stuff, very basic, noisy strategy. That's not going to pay the bills. What else was I doing? Oh yeah, yield farming was dead at this point. No, yield farming had gone. So I had this sort of really nice, really high performing strategy or sort of portfolio of crypto ideas that were really simple, but it just sort of disappeared. So I was effing around and finding out at this point, and I was trying some things. And one of those things that I'd noticed was that the borrowing cost on Celsius spot on FTX was far lower than the effectively the funding that you'd pay on the short. Was that right? Yeah, funding pay you. Funding you pay on the perp.
What James just said. So you could the funding to go long the perp, you get paid, say, and this isn't a hyperbole, 1,000% APR or something like that, like something ridiculous. But to short the spot, so to sell the spot and borrow it, so it's a different instrument, but they're obviously tracking the same. It's the same thing in a sense, but not. So to sell the spot was a lot cheaper to borrow. So so you'd go long.
And what you could do, and what you could do is you could have a look at what had been the borrowing cost on the spot historically, and is that predictive of the borrowing cost in the future? And you can look at the basis on the perp, the funding that you would get paid on the perp, and you can see that is predictive of the funding in the future. So you can set up this trade that isn't an entirely stupid idea. It's backed by some amount of analysis where you're long the perpetual future and you're short the spot. Now, at this point, I put this trade on, and I put it. And what you're interested in these kind of trades is how much sort of size can you handle. So you're sort of pushing them up and pushing up, because like we've said, all of your trading is making the trade go against you. right? All of your trading is excess demand in the perp, which is making it carry less, as well as demand for borrow from the spot that you're selling, as well as price pressure that's pushing it down. So you're doing a whole load of things that are sort of cock blocking this trade, basically. So I'm doing this, and I'm aware of these things, and I like to do experiments and find things out. At this stage, I don't think I know what Celsius is. I certainly don't know how the borrow market, that sort of auction, however that algorithmic borrow rate is cut. So I put on this trade. I don't really understand. It's freaking massive by the time I then go and take the family off to a local hotel. So we live in Auckland. I sent the family off to Park Hyatt Hotel, which was close by, the nearest thing with high-speed internet, funnily enough. And I realized that I am absolutely incinerating money now on the spot leg. So the spot leg was something like I'm paying 3,000% borrow or something like that. And I sort of price it out, and I realized that at the rate that I'm doing this, I'm losing $250,000 a day in this freaking Celsius spot position. So I kind of bash out a message on Twitter, and I go, hey, look, does anyone know how borrow is calculated? If first thing in doubt, just sort of smash some smart ass will tell you how things work on Twitter. So I do that, and then I talk to our mate, who was tended to be in similar positions to me, and he's also got the same position on. And I talked to him, and he's, between us, we think we're 40% of the borrow on FTX on Celsius spot. And then now I'm like sort of white as a shit. I got like, well, we're going to have to talk to each other about what we're doing here. Otherwise, one of us is going to screw the other one. And like, anyway, like, so what it ended up happening. So we didn't manage it particularly well. I think the first thing I did was go and get a beer out of the mini fridge and kind of think about it. And the housekeeping were in there. The lady that was in there recognized me from last time I was working doing this kind of stuff. Made me a tea. And I kept it on for a bit, and then I sort of thought about the dynamics, right? And I thought about the impact of my trading and other people's trading who were short this kind of stuff that is costing a lot of money. Okay, and go, hey, look, I don't want to rip this thing off entirely, maybe, because my trading is actually sort of going to push it in the direction that I want it to be. It's going to bring down the borrow cost. If I'm covering out of the short, then that's actually going to make my short cheaper in the future because I'm going to be less. So anyway, we sort of between us came up with some kind of plan, but they end up with me just taking quite a lot of the short position off. So now I was basically balls long Celsius perp on the understanding that this thing hadn't quite paid out yet, and it's quite likely that this demand from the short squeeze of 5,000%, borrow is going to drive this thing. So then I went off and had a nice time with the family, went to sleep, came back, and I'd completely pulled myself out of my hole with what I guess was effectively ended up just being a reckless short squeeze bet on Celsius perp. So I closed that out, and I sort of thought about it. Was that a good trade? Was it not a good trade? Well, it was certainly a very different trade to what I tried to put on to start with. But on one hand, it made money, so that's nice. On the other hand, I think those those squeeze dynamics are real. So then I started looking at that. I go, hey, look, Celsius has had ridiculous borrowing costs on FTX. What happens when borrow on Celsius gets enormous? And I just ran some real simple data analysis. I go, hey, look, if Celsius borrow is over 3,000% or something, what are the returns on the perp or the spot when that happens? And you saw that they were almost unanimous, massively positive, right? So at that point, we started or I started trading effectively a short squeeze strategy. So every single time the borrow rate on Celsius spot got over some threshold, I can't remember what it was, 2000%, 3000, something like that, I would just start longing the perp. And I'd long the perp because I didn't want to reduce the borrow on the spot, right? So I want to trade the instrument that's doing the less damage to my trade because I want the squeeze. And that trade was very, very profitable, but given the amount you could put in it. But of course, you soon also become the market in that trade. It's all fun and games on the way up because you're literally pushing the market up with you, right? You're generating positive P&L for your own accumulated inventory by pushing the market away from you. But at some point, you've got to get back out of that. And, once you get back out of it, you'll find that you just round trip the whole thing because your market impact on the way down effectively takes you out. So there was some skill to executing that. And one thing that I found was that I was very good, pardon me, very good at executing it. But all of our efforts to automate that weren't. Right? That when you think about how you automate that, there is a bit of context awareness that you need to do that trade, even though it's a dead simple, dumb trade. And one of my regrets, I guess, from trading crypto is that happened to us quite a lot. Where we have a trade that I could do manually and I could do it very well, but then when we tried to automate the exact same thing, we trade them side by side, and the bot would lose money, and I'd make money. But where we get to here, mate, is the bit where you come into it, right? So you at the same time were trading. You were on another trade.
So
A
I'm
similar
like
trade,
prolific in these spreads. So I was doing similar to what James was doing, but I was going. There was a website called FTX Premium. The guy who ran it,
that guy was an absolute hero.
no, he was like
Absolute
19 or
hero.
20 or so. Like he was just
Yeah.
like
So
he
much money was made and
from
then
that
given back.
website. He like yeah. So I think his name was Robin. I've spoken to him on Twitter. Like he's a good guy, and
He's a king.
he's like I remember I can't remember what happened, but my on-chain arbitrage had gone away. Like it had died. So I'm like, okay, I've got a bit of capital. I want to put it to use. So I start looking at the spreads between futures spreads and then the future spreads and then the perps sort of thing. And so what it worked out was you could annualize. Sorry, hold on. I'm just thinking. Yeah, that's right. So the funding was like 2,000% negative on the perp to get long, and then you would get you would short the futures against it. But when you shorted the futures, you would lock in say negative 200% APR,
Yeah.
but like you would make so much on the perp that it would like. So what you were effectively betting was that the funding would stay consistent on the perp, right? So
Yeah.
I'm
Well,
doing
and that you wouldn't get absolutely wrecked on the basis of the future, because
yeah.
because the perp, remember, has only got an hour to expiry. The future has got a, I don't know. You were in sell 0930, weren't you? So that thing
Yeah.
could fly. That thing could fly anyway. And so you were short the future. It's trading a massively negative.
It was like I locked in a huge loss by doing that because
it went positive, right? It got
okay. So what? So I'm in this trade and I am like, there is a month where I am like printing money and like I don't want to say numbers, but like believe me, like it was multiples of what I could earn in a year at a day job, and I was like thinking I'm so clever, like I'm on car sales and all this shit, and then this is one of those things that like deeply impacted me. So one day, to make it even worse, so I got a message, and I outsource a lot of my ideas to Twitter. So I'll be like, if you've got a good idea and you message me, and you say put on this trade, and I put it on and it works, I will pay you a portion, right? So I get a lot of messages like this. So I get a message from a guy, and he says, I'm looking at the sell spread, long the futures, short the perp, and I think that this should revert because it's. And I was like, why do you think that? And I'm sort of prodding this guy, and I I took a screenshot of it and I sent it to our mutual friend, and I'm like, get a load of this guy. He doesn't know what he's talking about. Like, I'm like, oh yeah, look at this guy. He's doing the inverse of our trade, our counterparty. They're so dumb. Yeah. So then within a day or two, the spread went from negative say 20%. Okay, so it was at negative. It went from negative 30. So
Yeah.
just say sell was trading at $1. So I was long the sell perp at $1, but then the futures was at 70 cents. So think about it. I'm short the futures and I'm long the perp. So I've lost 30%, right,
Yeah.
or whatever it was. So I've got this trade on, and it goes from negative 30 to negative 20.
Yeah.
So it's not linear. It's like
Yeah.
bang, and I am
Yeah.
like in pain, and I am like,
Yeah.
oh man, this was meant to
And,
happen over.
and all if there are any old school commodity guys listening to that, they're just nodding their head now, going, "Yeah, well, what did you think was going to happen?"
So I'm like, man, this should have happened like drip by drip. Like, where the fuck did this come from? That just killed my profits. So I'm like, oh, that's so weird. Oh well, better double down. No, so I keep this trade on, and it's ticking along. But if for the more acute or sophisticated listener, you would have noticed that in being short 30, short 70, long $1, I'm actually long sell as well. So
Yeah.
sell's going up. So I'm like printing on my sell long. So it's like it's doing
Yeah.
really well. I think it went from like $1 to like 5 or something. So I'm like printing there. And it was, long story short, one day I come in and I'm sitting down and it's creeping lower, and it's the futures is creeping higher, creeping higher, creeping higher. And at one point, the futures spread goes from negative 20% to plus 15%. I lose six figures in like
Horrible.
3 hours, and I am fucking dying, man. Like, I am in so much pain. And the worst part was, I can't get any more money from my bank account in. So I am like, it makes no sense. It makes no sense. And like, I'm in a group chat with James, and I am like, this trade now is so plus EV, because you could sell the futures at above the per price, pick up the carry, and make money on the futures spread.
Yeah.
So it's like the most incredible trade now. And I say to James, I'm like, hey, bro, don't know what you're up to right now, but it's so weird. This thing's so out of line. And I remember you were like, oh, that is wild. Donk. Put it back in the line, and it went from like being negative or plus 15 to like back to like -5, -10. And
Bash it back
yeah,
down.
and then I think you did. I think like I'm like, you're like, oh, I made money. Thanks so much, Wes Contrarian. And I was like, yeah, bro, no worries. Like,
Yeah.
you owe me a
I
cigarette.
don't think I realized at that point just how axed you were on that. I think I just thought that you were telling me a really good trade, and I was like, "Oh yeah, thanks, mate." But yeah, I kind of knew you were in that trade, and
Big
yeah,
trouble. Like, I was like 20% of the open interest. I'm like, fuck, I am in danger right now.
but those trades were good fun. Crypto is a sort of a wild land where things, especially on chain, right? Like people are doing things on chain. There's imbalances in supply and demand that
Yeah,
inevitably play out in other places. And if you're pretty clued into this, like our mate who you talked to the other day, he does this stuff all the time, right? If you devote your time to those trades, you make good business with it. I must admit, I found that market sort of exhausting, to be honest. Like, after that, I was trading those squeeze things. I was also trading like just some real dumb structural effects on FTX. Like you talked about FTX premiums, right? Well, I do this trade, which was kind of like a basis trade, but it was real dirty hedged, in the sense that I'd just be short the stuff, the perps that carried the most short, and I'd be long the perps that carried the most long, right? And you found yourself just being aligned with a lot of structural effects doing that. You found yourself generally being aligned with funding manipulation and things like that. And there were a lot of things and squeezes, and there were a lot of things that sort of worked in your favor on average in doing that stuff. But it also involved trading a lot of very illiquid stuff at a really quite inappropriate size, which meant that if you wanted to get out of a position, well, that's like 6 hours work, right? of you trying to work these things. So I ended up sort of, by the end of it, I was almost full time trading effectively a medium frequency carry strategy. But the actual returns on that thing were insane. But yeah, then sort of FTX, all the fraud and stuff came out, and I managed to rip some money out, but not all of it. At that point, I thought I'd just kind of enjoy the rest of the year. I know no more crypto for me for the rest of the year.
it's it's funny. This isn't. It's one of those things how when things happen, you know, the rumor mill goes into working overtime, and
Mm,
like I just never forget. I've talked about this before, but it just always amazes me how once one thing everyone assumes to be true becomes false,
yeah,
everything's open for grab. Like everything's
yeah,
open to interpretation. It's like, well, I mean, say what you will in the comments or whatever, but I really did think I didn't think SBF was such a fucking idiot, to be honest with you. I had no idea that he would like be glad handing. They're gonna crucify him for making all
yeah.
those politicians look dumb. Like, if you think those politicians are just gonna be like,
That was
ha ha
wild.
ha, all this stuff. We shook hands with him, let him come to Congress dressed like shit, and now we're gonna let him off with a slap on
Yeah.
the wrist. Like, he's going to prison forever. I hope. But yeah, like
But
what?
I think one danger with that stuff, at least like one of my errors with that stuff, is I'm sat there, I'm like sharp six in a frickin' carry strategy or something.
Printing.
Like all I'm doing is sorting things on FTX Premium and buying the top and selling the bottom. And I'm making sharp sit and I'm going, hey, well look, I've identified an opportunity here at the right time. You want to tell yourself that what you're doing it's because you're smart, rather than what's probably happening is that your counterparty, Alameda or whoever, is just knowingly incinerating money because they don't care. And it's really hard. I've done this for a long time and I still got caught out by that. I still bought my own bullshit going, no, this seems reasonable. I can identify good opportunities. I'm playing this opportunity at the moment. This seems reasonable. And I just sort of kind of wish I'd had a bit more self-awareness to go, well, hang on, like is this reasonable? Like, is this reasonable? Where is it? And even if I'd done that, I think I still have gone after it, but I would have been much, much quicker to rip money out of that place than I than I was.
Retrospectively, the biggest red flag was like all these APRs paying like negative 1,000% a year. Sorry,
Yeah.
all these perps paying like negative because like yeah, like when you think about it, it's like well, this isn't happening on any other
Yeah.
platform. Yeah, so
Yeah, it
it's
was
like
so much easier to make money on FTX than it was anywhere else, which was why so many of us had too much money there, right? So many of us had too much money because it was far easy. There was all the sort of Sam trash that just printed money, right?
Um, yeah, no, traumatic. I wanted to say as well. So this is one of the questions is you once I saw you on Twitter saying to someone so someone posted they said if I had 10 grand in cash would it be worth me doing trend following strategies? And you
Oh yeah,
said something akin to well if you trend following is good because you can put a lot of capital behind it, but if you
yeah,
got 10 grand you could do the really juicy trades.
yes,
Like, when you say really juicy trades, what would you define as? And this obviously isn't financial advice or anything like that, but it's like
yeah.
in terms of trades that with that amount of capital is it like scalping order books or what would you what juicy trades are you alluding to? I guess.
I'd sort of, if I'm trying to generalize that, I'd say it's stuff where you move the market, right? Where you, even on your 10 grand, move. And I imagine if you've got 10 grand and you're trading with it, you couldn't probably don't imagine that places like this exists where you could have serious market impact in the market. But they absolutely do, right? Especially in crypto DeFi stuff. There is stuff where it would take me days, right, to build a 10k position in some of that absolute dog shit that was listed on FTX by the end of it, right? So look for those opportunities. Look for those where someone. So I would look at that. Okay, I would look at a mispricing that would take me 12 hours to get into for 10 grand. Like and I don't want to sound like a dick, but for me, 12 hours of my time isn't worth that. For me, that opportunity just isn't worth my time. But for you, it might be, right? You can build and you can compound that 10 grand pretty quick if you're going after trades that are heavily, heavily constrained. Because no one wants to do tons and tons of work to close that opportunity that might pay them $500 if it all goes well. Right? But if you are prepared to do that, and you're prepared to keep doing that and scaling that thing, then you can. So look for, Augustine talks about this a lot. Just look for opportunities that other people aren't interested in. Look for opportunity. No point, trading SPY options or something. Like, just look for if you really, and this is full time. So this is not part-time hobby stuff, right? This is pretty serious trading on a small account. You just want to go for those very tightly constrained opportunities. And the actual trading stuff doesn't have to be smart, right? Nearly everything, all we're doing is comparing things to each other and seeing which one's relatively mispriced. Ideally it's the same thing, right? It's a future against it somewhere else, or it's a perp against spot, or it's just try and do obvious simple comparisons, and when something gets out of line and no one can get much money in it, scoop it up and get your donk hammer out and make some money make some money pushing it back. And these things do set. You'll be surprised how much of this stuff is sat there, and it's because it's sort of hard work to to bash it back.
It's like traders are lazy, but they're also greedy. But they're also like,
Yeah.
and whenever someone says like, I do it all the time, it's like, oh, there's not enough liquidity. Like, I can't be fucked doing that. Or like,
Yeah,
like,
exactly.
oh,
Yeah.
that's not worth. Like, oh, I do 10 grand. It takes me a week. Even if I double it, it's in a month or two. Like, it's only 10. You know what I mean? So it's like that is a huge advantage in some of those smaller, and like airdropping is a prime example of this, where it's like I see people make like 30 grand in airdropping, and every time there's an airdropping cycle, I'm like, man, I gotta get in on this. Like, how does this stuff work? And
Yes.
then it's like, I look around and like most people made a grand or two, and I'm like, oh, well, a
Yeah,
lot of work.
I've literally never done. I've never done that at all. I'm like you. I've talked about it. I've thought, hey, look, maybe we should start trying to do that, but we never got round to it. It always just didn't seem worth it. Although, but if those things are easy, they add up. But everything takes longer than you think. Right? You go back to that really stupid strategy that I was talking about, where I was just trading carry on perps on FTX. Now you'd go, hey, look, that's something I can intuitively explain in a second. You probably imagine that that's not much work to trade, but that probably took me 5 or 6 hours every single day of trading that thing, keeping it, because this stuff is very illiquid, right? If you go in and you're not thinking about what you're doing, you're making a mess and you're just giving up the entire day's P&L in market impact. So you've got a lot of work for this stuff. Now, if you imagine how simple and dumb that strategy is, that's sort of 5-6 hours work. Imagine if you're managing multiple versions of that stuff. It all really adds up, right? You sort of, I think people can be tempted to think that there's people out here doing this incredibly sophisticated, diversified stuff. There are businesses doing that stuff, but those businesses are staffed by hundreds of people, right? Be realistic about what stuff you can actually do, and when you understand that, you'll realize that things will sit there, right? Because we ain't got the time. We're busy. We've got stuff to do.
Yeah, it's so true. And it's like, it's funny because when I was like, dreaming of being a trader and listening to all the
Mm.
interviews and stuff, and reading all the books, I'd be like, the act of executing is so cool. But then you
Yeah,
do it and you're like, oh my God, it's so boring. Like, I mean,
yes,
it's not, it's exciting, but in another respect, like, it's so just sitting there clicking and just like thinking about, and it's just like staring at a DOM, and it's like, you
yeah.
know what I mean? It's not as sexy as that Have You Believe on the TV.
One thing I would say on that real quick is everyone new wants to automate everything, right?
Yeah,
They really, really fight the urge to real fight the urge to build out automation of things until you've got some experience of it, because the problems that you have just aren't the problems that you that you think you'll have, right? If you've got an idea, the best traders I know, I tell them something that makes sense, they're already trading it 2 hours later, right? Just smash in, just go and get some market feedback, get in it. Automation is really hard, right? If you think what you need as a person, you can sit in front of the screen, you can make common sense decisions about things. You're context aware. You can understand trade-offs. You can make relatively sensible decisions. If you're automating, you have to systemize every single one of those decisions, which means you can't just say do something reasonable on this, right? You have to be utterly precise about every one of those decisions. Also, every single thing that can go wrong will go wrong. It's just a lot of work. So try not to be too prissy. If you can trade something manually, just do it. Right?
But
It'll make
why?
your life
And the
easier.
time you spend trying to automate it, it might be gone. Like, you know what I mean? So it's like
Yes, yes,
make money
yeah.
now, today, at this very. I think you've said that a few times. Like, what can you do right now? Not 2 weeks, not a
Oh,
week,
yes,
not tomorrow. What can you do at this very moment to make money? And that's
yeah.
building out a strategy is like. Obviously, you need a strategy, but it doesn't need to be. You're not doing it for points; it's for money. So do it the easiest way.
That's right. I think that's by far the most important, or the sort of biggest failure mode that people have, is that they're thinking about what they want to do in the future, or they're building this wonderful palace of diversified alphas that they're going to trade in the future or whatever, and the future never comes because everything's complicated, everything's changing, everything. And you do need to really ruthlessly concentrate on what can I be doing today to make money. What can I do given the technology I have, given the skills I have, given the sort of understanding of market effects I have right now. What can I be doing? And if you can't think of an answer to that question, you probably need to get a bit more creative before you start building stuff towards the future.
Stay away from mental masturbation. Don't just like try
Yes.
to make
Yeah.
shit. Like it's like no, focus on the task at hand. Why we're all here. Um, I
Yeah.
got I got some questions from Twitter. And if there's any you don't know, it's fine. We can just skip it. But I thought some of these were pretty cool. So, one thing about you is that I respect is you. Obviously, you're a great trader, but I also think you're a relatively good person. Like you try not to do the whole rape, burn, and pillage mentality that a lot of traders, robbing from drunks and orphans and widows. So I guess in terms of both trading and just like life, what advice would you give to 20-year-old James?
20-year-old James. Wow, that's a good one. I think there were two French chicks that I met around that time that I'm pretty sure were inviting me for breakfast with some extras attached to it, and I passed that up just mostly due to absent-mindedness or something. So I told 20-year-old James to go to that breakfast, I think, and see what happens. Um,
You wouldn't want to miss out on that. Those
I would
those
want
those
I would
like good
want
trades. They only come around once every so often.
yeah, exactly. That's literally never happened to me since. Um, what would I say? I don't know. I don't have much. So about trading and career and stuff like that. Um, I'm sort of very grateful slash lucky in the fact that most of my crazy ideas sort of worked out to some extent. Right? There's been a lot of things that were stupid and didn't really work or challenging or whatever, but most of that stuff worked. I think on and sort of in trading sense, I'd go, hey, look, just if the going is good, get more chips in. Right? I think there has been times when, for variety of reasons, either because I've got other stuff going on or I'm uncertain, where I just haven't pushed a really good edge well enough. And the problem with that is that with that stuff, you're always rushing against time. You're always racing against the clock. And by the time you wait to be confident about that stuff, it's gone. So this advice is dangerous, right? Because most things that you are doing aren't really good edges. So only apply this if you're trying to apply this to yourself. Only do it when you really, really know you got a frickin' obvious edge. It's high performing. You know where it's come from, and then just get involved. So my trading, I guess, has been mostly sort of periods of really high performance around just sort of noisy, basic kind of carry trade, risk premium harvesting type stuff. So if you were to draw it, it would look real messy. Then it would just go up. Then it would look real messy. Then it would go up. Then it would look real messy. Then it would go up. And in personal life, what do I regret? I regret not giving people enough time. like it's tricky. One sort of reason that I'm probably quite good at this is that I can kind of go deep into things as well as having a sort of broad overview, and that broad overview involves ruthlessly deleting things that aren't important from your from your perception, if you know what I mean. Like if you carry that too much into your personal life, you end up sort of missing out on things that other people find are important. So there's there's certainly I wish I'd sort of had more time for people. I wish I'd been more present and kind of there with people. Like I struggle with for the transition from work to home life. Like you go from, especially if it's been sort of slightly stressful, it takes a long time these days to kind of wind down and get back into. So yeah, I think I tell 20-year-old me to sort of concentrate on that stuff a bit, be a bit more gentle, be a bit more present, give people more time.
It's so hard though because I know this is like, but like you didn't get where you were by taking a lot of free time. So
Yeah,
it's like
yeah,
I think the CEO of one of the old CEO of Goldman Sachs, Lloyd Blankfein, said like I would have told younger me to take it easy, but then it's like, well, would you have been who you
yes,
are
yeah,
had you have taken it easy? So it's like it yeah. I try to just have routines in place where I am present. So like for example, I
mm,
have dinner with my missus every night at the dinner table, and it's like no matter what, we always do
yeah,
that. So it's like because I think people they focus on trying to make memories. Like they're like, oh, I want to make the memories of going to Disneyland with my kids or whatever. But it's like you usually remember the routines. It's like, oh,
yeah,
I'd walk my
yes,
kid to school
yes,
every day. That's what you remember. You don't remember. I mean, like maybe you do, but that's what they'll
yeah.
remember. So yeah,
Yeah, so and I think half of the challenge with this stuff is just trying, right? Like half of the challenge is
it's just showing
try.
up.
But you can't be perfect. You can't be there all the time. You will inevitably disappoint people. You will inevitably hurt people. But you've got to try your best not to do that, right? You're gonna have like intentions and some intentionality around not doing that and being aware of it. Right? And I find, the more stressed and highly strung I am, the more difficult that is to do. And I don't know I'm getting better at it as I get older. Maybe I am, but I'm not really aware of it.
It's getting worse. And so, what was this is a bit of a this might take a second, but what was the best and worst advice you were ever given? I thought that was such an interesting question
Oh,
because like worst advice is so broad. I don't know. It's just I just thought that
yeah.
sort of caught my eye. So
So best advice was definitely my big English mate that I talked about. So I was doing a data analysis project for one of the banks out of the US. Um, and he was a trader, right? They were FX derivatives, and I was just annoying, asking lots of questions. He spent a large amount of time with me, kind of helping me with stuff. Well, but before I was even doing the future spreading thing, this was while I was still sort of playing around, being interested in it. I remember saying I took something to him, and he's like, "Look, mate, like you're not in fucking science class." He goes, "This is just c words, buying and selling." Right? Is that and I still say that all of the time. I was trying to figure out the market with science and maths and precision and stuff like that. And that's just bollocks, right? Like it's a noisy, adaptive system that's changing all the time. Your trading impacts it, everyone else's trading impacts it. It's a evolutionary breeding system of people buying and selling and quoting and doing things. Like you'll never ever figure it out. Just sort of let go of the fact that you need to figure it out. All you need to really do is identify one thing that people misprice for some reason, right? Either because they don't know something, or they're forced, or they're trying to achieve something else, or they're absent-minded or something. And you only need that one thing, right? You don't need to figure out everything. You just need to one thing. When does this thing become mispriced? You don't have to understand much of the variance, right? You don't have to understand much of why it has the price it has. You just need to go, when does this thing get mispriced sometimes?
and the liquidity, that was my big the more time I spend in the markets, the more I think about volatility uh, is a derivative of liquidity. Because what is volatility? It's percentages. It's big
Mm.
moves expressed in terms of percentages, right? But what actually causes that? It's liquidity. Because the wider the bid ask spread is, the more volatility is created, right? Like you can have a thing that moves a percent a day, or like a lot every minute just off the bid ask spread, and it's like that. And at the end of the day, that's someone lifting the offer or hitting the bid. And it's like, so you're right, it is just people buying and selling. And when you come into markets, like I think a lot of people think that there's some, like, I don't know how to describe it, but like big sophisticated master of the markets out there, but there's not. It's just
Yes.
people, like, with a lot of money. If you're talking
Yeah.
about, like, say Bitcoin, like to push that around, right, you need a bit of cash. But if you're like, go to some shit coin, get on some perp on Bybit or whatever that trades $1 million a day, and lift some
Yeah.
offers and see what happens, right? Because like you will see, it is just, it's just as simple as that. So yeah, I think I completely
Yeah, and the
agree.
market's hard to figure out. For example, like imagine if we had some one of those men in black gun thing and just sort of erased everyone's memory of what the current Bitcoin price was. Right? So no one has a clue what the current Bitcoin price was. No one had a clue what it's ever traded at, but they know what it is. And you turn on the market. Where is Bitcoin going to trade at? It's just going to be an absolute crapshoot, isn't it? Like highly, highly unlikely it finds exactly the same price or around there as it did before. Yet somehow the market organizes itself such that it's really difficult to make money buying and selling this thing. And there's some sort of dichotomy there, and you can turn yourself crazy trying to come up with grand theories of market pricing and stuff like that. I think you sort of reach some kind of enlightenment where you don't even really try anymore. You're just going, look, what technical effects are creating temporary distortions in price, and I'm just going to whack them with my hammer.
It is what it is. And what was the worst advice? Was there any advice you ever been given that stood out? Because I've been given a lot of shocking
Worst
advice. So
advice.
was there anything you got told, how maybe when you were a kid, or and you got older and you're like, that was such bullshit? Like, I don't know why I believe that.
I don't know. Like, so I'm this sort of, I don't know. I'm just sort of quite. I think like generally in kind of my general demeanor, I'm sort of chilled out and stuff. But I have this sort of annoying feature that I don't really listen to people's opinions or views or advice on certainly markets and things like that. Which is useful, right? Yeah, especially because people are talking about all kinds of macroeconomic stuff, and I just don't listen. I don't even really hear it. It just seems useless to me, so I don't really pay attention. But honestly, I can't think of any bad advice because like most of it, I just didn't really listen to. Like there were a few guys that I listened to, but I sort of started thinking that most people had no idea what they were doing, and I still honestly think that. Like I think most people that are transacting in the market, don't aren't really doing things that would cause them to make money.
Yeah, I agree. I agree more than I disagree, but yeah, I can't, like,
Mm.
yeah, because the vast because like the thing that is weird about being a trader is there's very little barriers to entry of actually being a
Yeah.
trader. Like anyone can just become a trader. It's like an entrepreneur. Whereas like if you want to become like a lawyer, you got to go. You know what I mean? Like you
Yes.
could open up
Yeah.
a Binance account. I'm a trader. Was there any
You
other
don't even
advice?
need to be real.
Yeah, exactly like me. I was a quant trader for a bit now. And so
Yeah.
like, is there any general advice or just like anything that, obviously we covered a lot of ground, but was there anything that just general advice or just, things, just something that maybe you think people might find useful, that like anything like that?
Yeah, a few things. One is take it seriously. Now, like, the market's incredibly efficient and it's incredibly dynamic and it's changing all the time. Um, the path to making money is pretty straight and narrow. So try not to do stuff that has zero chance of working, right? Or at least would be very hard to make work. Whilst I'm sure some people can make money just hoovering up a lot of broad information and trying to make sense of it, you and I probably can't do that. Right? We probably can't do that. So focus on things that are useful. Focus on things that you can actually observe and get some confidence in. Focus on things like risk premium harvesting, where, very uncompetitive trades where you can effectively get paid over the long run for taking on risk, and just have some structure around that that's realistic. When you're in front of the market and you've got to turn money into more money, that's hard, right? And you should treat it with respect, and you should think about it, and you should, take the easy trades when they're available. Add things on top of those. Yeah. Second one, don't be prissy, right? Like, so many people, they're worried about what technology to use, or they're worried about automation, or they're trying to build some palace of data analysis that's going to help them make money in the future or something like that, or they're worried about what technique like, none of that stuff really matters half as much as you think it does. Like, focus on today. How can I make money today? Like, what, given where I am, given what I know, given what technology I have, given my partnerships, given this stuff, what can I be doing right now, today, to make money? I kind of just very ruthlessly focus on that stuff. And 3 is have realistic expectations, right? I think lots of people get into, especially crypto, thinking that they're going to make 20,000% returns or something. Like, you might make 20,000% returns, but your chance of keeping them are really, really low. So, just be realistic, and don't do dumb stuff like don't like have to make money in order to buy soup for dinner or something. Set things up so that you have training stressful enough anyway. Set things up so you've got enough comfort. You're not trying to shoot for the moon. You just be kind to yourself, and don't be weird about it.
I think it's kind of funny because trading is, for 99.99% of people, negative EV, because they could get a job, they could do software development, they could do this, they could do that, and it's like,
free
so
job is free carry, right?
free carry, yeah,
carry on a job is amazing.
You get holidays, you know what I mean? You get nights off. But in saying that, so it's like when people message me, it's like, oh, how do I start or whatever? I kind of almost feel sorry for them, because it's like, either way, they're gonna fail and just be like, oh yeah, this didn't work out. I got to find something else to do now, or they're gonna succeed, and it's like a really full-on way to live.
It is, yeah.
So it's like
it's a difficult way to live. Yeah,
it's like either way, they're gonna cop it, and if you're. But the thing is, as well, if I say don't trade and you don't trade, you're probably never going to make it in the first place, because it's like you got to.
Yeah, I mean, I wouldn't have listened to me, and I wouldn't have listened, and you wouldn't have listened.
No,
we're, in some ways, we're being hypocritical here, and it is. I mean, it is a lot better than a real job. Like, just despite what we said, despite it being hard, and like, it is a lot more fun than having a real job.
And it's like, it is. There was this quote in this book about trading, and it said, every night I go to sleep and I don't know how much I'm going to wake up with.
Yeah.
Less or more, but but no, I completely agree.
Yeah, and I mean, the other thing is just make sure your partner is on board with the level of variance that you'll experience with it. And a big part of this, I think, is just set things up so you're not paying life expenses out of trading P&L. Like, if you can set it up so that you've got a bank of just liquid savings that you're not gambling with, or if you can set things up so you've got some other stream of income that you can use to deal with the life essentials. I think that's really important, because if you're in a partnership, if you're in a marriage, whatever, there's 2 of you, right? And you have different risk tolerances. People deal with losing money in different ways, so make sure you're talking about that, and make sure you're setting things up so you're not causing yourself strain, right? Because it's hard enough anyway. Like, just
yeah, I mean, if you like, I completely agree. It's I can't even imagine what it'd be like for my partner not to be on board. It's like, she'll come home and I'm like, yeah, I lost like your annual salary today, just, and it's like, I'm like, just,
and she's cool with it, because my wife just doesn't. Yeah, when I tell her, she just can't really understand it. Like, it's not in is just not in her frame of ref. Like all she knows is effectively the same amount of money goes out of the out of the door every single month, and she's sweet.
I think my girlfriend has like a better understanding of trading than like 90% of Twitter. And I
Yeah,
don't mean to say
I don't doubt it
to
for a
sound
sec.
facetious because like I've got a whiteboard. Like we will be eating dinner. I'm like, just wait. I'm like, so look, here's the thing, because I'm talking to her, but I'm also talking to me. I'm like, wait, does this make sense? So we're like drawing things out. Like we've talked. So yeah, I just think it's funny because sometimes I hear people like, oh, what's this? And I'm like, geez, my girlfriend knew about that. And like, I was talking about like carry trades in 2019, and you guys are like, what? You know what? You know, what's a future spread or like what's rolling a futures curve? It's like, yeah, ooh. And just one last thing, where do people find you, dude? So like, maybe someone's found this and they don't know because we're obviously huge celebrities on Twitter. We just get women throwing
Mm.
themselves at us and people throwing sponsorships. But if you don't know us, you know, if you don't know us, where do people find you?
So the easiest place to find me is on Twitter. I'm the Robot James on Twitter. I've got a website that I started I don't know, a few months ago, which is robotjames.com, where I mostly just put the things that long form things that I write on Twitter on there. I've got a website, robotwealth.com, which is my friend Chris's business, and I teach courses and things on that. Or I teach a course on that website. There's a blog there. Some of it's written by me. Most of it's written by Chris. What else? No, that's probably it. That's the best way to find me.
And the $1 million question is, when should we expect your book coming out? Is that
Oh, I'm writing it.
did the petition move the needle at all? That I
Yeah. So I'm right. So what the idea behind this is to kind of similar to the story we told about Celsius today. Right? What I wanted to do is put a book together that's teaching important concepts like market impact, adverse selection, all of the things that maybe seem a little bit sort of philosophical in your mind at the moment, and teach those concepts through examples of trades that went horribly wrong, or trades that turned around, or entertaining trading stories. So the idea, it's not going to represent me in the best light, I don't think. But the idea is I'll just tell funny stories and use that as an opportunity to teach important trading concepts. So far, I've realized that I'm a far worse writer than I think I am. So in my head, like I'm like Hemingway. Words, yeah, it turns out to, yeah, I don't know why I think that, despite zero evidence of me being good at writing previously, but I sort of somehow imagine these wonderful words would fall out of me. But turns out it's a bit harder than that. But I am working through it slowly.
Thanks so much for coming on, James. I really appreciate it. I look forward to having you back in the future. I think a lot
Yeah,
of
I had
people,
fun.
yeah, I think a lot of people get a lot out of this. But thanks so much, mate. Really appreciate it.
Thank you, mate.